My name is Dan McMorris. As Steven said, I'm the founder of the Provenance chain network. My journey to be on this stage, aside from now being a Texan, I'm thrilled to be the moderator here, but my journey to get here started with a 17-year career in supply chain. And then sadly dismissed Bitcoin. Finally got into Bitcoin investing with crypto, but I saw the potential application of distributed ledger for supply chain, and we started conceiving of a solution of what that would be. Founded the Provenance chain, started work with semiconductors, got recruited to National Defense University as they're trying to figure out policy. How do they adopt with an acquisition to mitigate risk? Back here now with Texas Blockchain on the special interest group, which is enterprise adoption, which is where I'm talking with Steve and you later, hopefully, at how do we incorporate it. But then just recently, my company has been awarded a patent on our approach for what it is that we do on the discussion today. So I am fascinated to hear the comments that we have from Carla, where you've researched, and Stephen, what you've actually experienced, and we'll see where the conversation goes. But before I do it, I'd like to actually first pitch it to each one of you for an introduction of yourselves. So Carla, why don't you tell us about your experience, where you come from, how you made it to SMU, and what you're focused on.
Sure. So I'm a blockchain lawyer by trade. I was at Perkins Coie in Seattle for 8 years before I became an academic, and I was among their first blockchain lawyers starting in about 2011. I then became an academic with my focus entirely, research-wise at least, entirely on the intersection of business law and blockchain. I teach blockchain in the law here at SMU. I've taught it at Michigan State University. In terms of like work outside of the law school on blockchain policy, I was the chair of the Texas Blockchain Working Group on, was that the right name? The Working Group on Blockchain Matters, whatever it was called, for a year that produced the Texas Roadmap for blockchain-related policy. I was one of the 4 advisors to the UCC 2022 amendments that created Article 12 to create private law for cryptocurrencies. And I serve on several international bodies working to harmonize private law for crypto sort of worldwide, particularly at Onidra.
You know your stuff is really what it is. She wrote a research paper, and I skimmed it for this, and then on skimming it, I actually sat back for an hour before here, and I read the whole thing. I was like, wow, this is amazing stuff. So, Stephen, tell us about you and about Riot and about Castle Rock, Colorado, and Dallas.
Plan. Sounds like a plan. So, Stephen Howell, Chief Operating Officer at Riot Platforms. Been in that role for about 1.5 years. Prior to that, I ran their manufacturing arm and infrastructure for Riot. Getting a little older, so going back, just traded power, manufacturing, for a couple decades, sadly, at this point. So we publicly traded a Bitcoin mining company. We dabble into other things. We have a large engineering service as well. So we are vertically integrated. We build our own electrical equipment, and we actually design our own substations.
It's fascinating. Okay, so I'm going to kick this off. We're going to dive in. The first question, Steve, actually was one that you proposed. I'd like for you to walk through what happened within the supply chain for COVID. What were lessons learned that you had, that you saw? And just tell us the implications that it had, what it led to this ASIC supply crunch. Why don't you, Stephen, take a couple minutes and tell us?
Yeah, absolutely. So, and I'll speak it, I'll start out, one of the issues, it's like toilet paper, right? I know it has nothing to do with ASICs, but there was no shortage of toilet paper. There was fear and anxiety. And so the market ran and captured all the goods and kept other individuals that could use the goods from reaching it. So every time that happens, we go through a standpoint of electrical equipment. The individuals for years and years and years that have been running their supply chain assume that six components equal a breaker. And so they track and they try to dog down and find those 6 components. And so as they started digging down and find out where their equipment comes from, they realized that those 6 components had 50 to 100 components that made that assembly and had no idea where it came from. Insulators from China. There was hardware sets that came from India. all equipment that they thought was domestic and that they could go to their suppliers and apply pressure and say, move us to the front of the line. But it was a cascading effect. As you went further, they did not know when they were going to receive equipment, and further and further and further down the chain. And so additionally, what added to this was large ERP systems like SAP do not function when garbage goes in. So they had no idea when their equipment could be built or when their equipment could be shipped. And we had no idea when we were going to receive equipment. So that was the crux of the problem, is nobody knew actually where the equipment came from in the first place.
So Carla, the question to you based on what Stephen just said, based on your research, what policy or legal gaps did this cascading post-pandemic world and disruptions reveal, and how government and private actors approach supply chain integrity for critical digital infrastructures like this?
Yeah, so the lessons about how the problem happens further and further down the chain that you don't even know about is a big lesson for risk mitigation on the inside. So the paper written by myself and Kish Perella at Washington and Lee is focused on supply chain resiliency and really offers a framework for companies to think about how to make their supply chain resilient. The effect that we heard described here is one that we would think of as secondary risks. So secondary risks became more and more prominent in the context of COVID. And what we learned from that is it's much easier to contract for risk mitigation with your direct risks, right, or your direct supplier. But often people hadn't thought well about how to contract for risk mitigation further and further down the chain to think about those secondary risks in advance. And it's both a contract design question and a corporate governance question, frankly.
And it was digital and analog at the same time. And that's an interesting aspect of your research.
Sure. We actually think that's the primary contribution of the research. And I just wasn't sure if this is when I should talk about it. But in the past, particularly say toilet paper example, the thing that you're worried about is physical supply chain. So it's physical things. And it's true in the mining context that it's the physical components that were difficult to obtain. But the delay in those physical components also had an effect on your ability then to mine appropriately with the software, right? So the deal is Bitcoin and the Bitcoin blockchain is a hybrid technology, right? It's based both in hardware and software components. And you have to think about the supply chain for both the physical supply chain and the what we call the data supply chain, which is sort of a new concept in supply chain literature.
Can I piggyback on something as well? So another thing that we experienced, and as we researched what actually is going on, we felt it was a fundamental misunderstanding of just-in-time manufacturing and lean manufacturing. So it was confused to, we ordered the product, one product takes a week to get, one product takes 2 weeks, and so on and so forth. And so they were ordered in that time for it to land at the facility to be assembled and packaged. And what was happening was, as that supply chain was interrupted, they had no alternate supplier. And so when they reached out, that 1 week item took 10 weeks, and it threw off the entire manufacturing schedule.
Which then had an impact on the software, right, on the data supply chain side, which people hadn't considered up to that point.
All right, so I'm going to move on from the base framework, and we're going to move on to provenance and trust, because that's really what you're talking about, is provenance, understanding where it came from. I have not prepped either of these, the panelists here on the questions, but I'd like to start with Carla now. Okay, so based on what you just said, with the U.S. and global trade increasingly weaponized, what are the biggest challenges and opportunities in building a trusted, diversified mining hardware supply chain for national security?
So I think there's a little bit to unpack there first. So there's an increased importance on the supply chain now. So in the mid part of the Biden administration, the USTR, the U.S. Trade Representative, classified blockchain and distributed ledger technology as a critical and emerging technology, making it squarely within the national security priorities of the country. Then add to that Trump's creation of a strategic Bitcoin reserve and, say, other state states like Texas, creation of a strategic Bitcoin reserve, and all of a sudden the national security priority of Bitcoin in particular is sort of tenfold than it was before. So part of the policy problem then is ensuring resiliency in critical and emerging technologies, which we argue, of course, requires attention to both the analog and data supply chain. Sorry, now I forgot the actual question. That was the background, but I think the actual question was, I don't actually know. What was it? Well,
I think
didn't tell us what they were in advance.
Right, no, you've answered it, right?
Okay, good. That's good.
The implications to national security for such the downstream waterfall effect of what Stephen was just describing.
And then the other part is because of the trade wars with the tariffs, right? Then you've got a complicating factor where some national security priorities conflict, right? Where the tariffs might cause further delays, and then, or at least seemingly conflict. I might argue that they actually work together quite well, because then the impetus is to create domestic suppliers to fill those supply chain gaps so that you avoid the tariff implications. And then you've got a stronger analog supply chain at least.
And my question to Stephen for Riot. Let's talk about not just scheduling, right? Reverse order supply chain staging, but let's talk about provenance. So how important is verifiable provenance for ASICs and mining infrastructure in your view? And what changes for miners when the origin, the compliance, and the authenticity of every asset can be proven, not just claimed? Is that something that's important to Riot? And what's your reaction to that?
So one, that was a bit of a mouthful, but I'll attempt it in this manner. It's absolutely important. I could just say a general example possibly may have happened to a company I work with. You get a phone call and says, "Hey, you can't prove where this came from. You have 48 hours and it's going to be ours." And that gives anxiety to whoever receives that phone call. And so you jump through hoops to try to prove, like, no, this is where this is clearly where their origin. We can prove it. And when you get a response like, "Give us pictures. We want to see actual video of people creating this product," which, oddly enough, they have. So, mission accomplished. But again, nobody wants to say that, like, millions of dollars being threatened to be confiscated.
So what would change if we're at a blockchain conference? So what happens when the distributed ledger technology could apply and say, with immutable proof, that the evidence is here in the supply chain to show that that's authentically came from the origin that is stated for policy, for governance? Well, let me start, Carla, with you. It looked like you had a thought on that. Why don't you take it from there?
I actually think the main thing it does is shift the inquiry. So it does even if it is audible, like verifiable proof of steps in the chain, it still matters like who put what into the chain, like where the data came from. So you might not have to take pictures of the thing, maybe you still do, but depends on what data was put in the chain. But what you now have to show is that the people who put the data in were telling the truth, right? So think of it as like registered mail for supply chain. Like you can show that once the data was entered, it wasn't tampered with along the way. The question is, was it tampered with at the point the data became part of the chain, right? So it just shifts the inquiry. Maybe it makes it more efficient to answer the question, but it shifts the inquiry.
So that's fascinating. Stephen, any thoughts you had on that? When you went through that exercise to try to prove, and how long did that take you and your team? And was there any implication that you had on your production, your output capability?
Yeah, from a standpoint of time, it had to happen quite rapidly, but the man hours that it took were tremendous.
Yeah.
And so ideally, what you're describing, I feel like if that automates the process, it's automatic verification, and then there is no stress, there's no concern, or it would catch it early enough to where you can actually do something about it.
Excellent. Let's shift over to governance. And so, Carla, you and I were talking before about your research on this area. I'd like to know where you see the greatest regulatory or legal challenges, maybe solutions for integrating blockchain and AI together in a national scale for this policy, for this solution.
Yeah, so we're private law scholars, so for us, the focus is on the private law side rather than the regulatory side. Although the focus of the paper is the way that they interact, because national security law is very much a public law thing, right? But the point is, because of the way Bitcoin in particular and blockchain and DLT more broadly have become national security priorities, that puts a tie-in that people don't always recognize between private actors and private law and the regulatory side. And so for us, two of the primary private law concerns is one I mentioned already, contract design, and then secondarily, corporate governance. So particularly for public companies, but for private companies as well, corporate directors have responsibility for oversight, and their oversight responsibility is a fiduciary duty, and it becomes more stringent when the topic of oversight is compliance with the federal law, or say supporting national security priorities, right? And so the key is to make sure that in terms of corporate governance, that your board, and particularly board committees, which are usually charged with oversight duties, that somebody is in charge of oversight of risk management for your supply chain, both analog and data. And that's not always a typical charge to board committees, and it can be a significant gap for corporate governance.
So it's interesting you bring that up. I've shared here publicly that our intent as a company is to potentially go public on the Texas Stock Exchange. And you were starting to put our governance together. Steve, what is Riot doing, if anything, to try to capture or change and have governance oversight to some of these risk mitigation thoughts that impact operationally the supply chain that you're trying to do for ASICs?
So from a standpoint, I shouldn't say this name, at a blockchain conference, but to paraphrase something that Warren Buffett said is, you buy when there's fear, and you sell when everything's fantastic. And so if you look at the cyclical nature, everyone runs to buy ASICs when the market is up and Bitcoin is up. And there is no crunch when Bitcoin is down. And so you have to look ahead and plan for the good times during the bad times, which they're not bad times. Say the medium times. Yeah, that's when you need to plan.
From a fiduciary duty legal perspective, one thing that companies should also be doing, not only with charging a board committee with oversight obligations, but setting up an compliance structure, so that the rule is you have to have systems in place that in the ordinary course of business would bring to your attention problems in that area of oversight, right? So if you're using a system that, like you've been discussing, that would, I think the words you said was allow you to intervene right away, that would be one way to comply with your fiduciary duty obligations, right?
So we've got 3 minutes left. We've talked a little bit about what the issue was, about provenance, and then about governance. Let me just leave it open-ended at this point. What do you see, and Stephen, let's start with you. Looking at the future, what role do you see for greater interoperability between blockchains, maybe AI for traceability, and standards for governance here that we've just talked about, to unlock the ability for your company to reliably provide ASICs mines to the supplier?
Right. Well, I think the biggest opportunity using AI would be just the broad scope, call it a bill of materials, the however many SKUs, however many items that are required. I think could be able to compile that and come up with specifically the lead times on them to compile it to get to that end result that you're looking for. And I think it could do it instantaneously while you're sleeping.
So, Carla, a little slight twist on that one. What are the most promising ways for, let's say, industries, innovators, and policymakers, those three bodies, to collaborate to secure this critical infrastructure for digital assets going forward?
We think, Kish, Prella, and I, it's the sort of motto of the paper, that the key is for policymakers, the public law people, and the private law people, including corporate boards, to think about this holistically and together, because it's not just a regulatory risk, but also a contractual fiduciary duty, like shareholder suit kind of a risk, right? And that is a thing people don't do very often, really consider those risks in tandem.
So we've got 1 minute left. Stephen, what question didn't I ask that you wish that I would, that you'd just like to speak to from Riot's perspective on the market?
Wow, I'm going to use up my last 20 seconds to say, buy Riot stock.
Carla, any closing thoughts? Any questions that I didn't ask that you've researched that you'd like to offer?
No, just to say that we really hope the paper is super practical, and if you would encourage folks to read it, because it's more like practice guidance, not legal advice, but practice guidance than anything else, more than a scholarly, like, theoretical endeavor.
So we hope you've enjoyed this. This is a talk about how policy, how supply chains, and how ASICs mining come back and give value to us as Bitcoin enthusiasts. We understand that there's a supply chain behind it. Thanks to our panelists. This has been a great discussion. I hope that you found it valuable.